Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. Let's get in the zone, the cash money zone. A lot going on over the weekend. The grain markets are kind of wild right now. It's pretty dead in here in the financial room. But the grains are all up a little bit, showing a little bit of strength after the overnight weakness we saw. Basically, grains really fell off because the Midwest, the Corn Belt, got a lot of rain over the past, basically 5 days, starting on Thursday, heading through Nebraska. It pushed through here in Chicago and on into Indiana and out to Ohio, basically over the weekend, Saturday, Sunday. They got a lot of rain. Indiana basically got about 1.5 inches over into Ohio. They got upwards of 2 inches. So all of this rain was really good. For who? Not the corn. Like I've been saying, the corn is done. This rain isn't going to help the doughing process. We're past that. We're on into the denting process, which is where the corn is starting to dry out. It's done with its growth cycle. It's starting to dry out and getting ready for the farmers to get in the fields and take this out. Whether or not they have anything to take out at this point has yet to be seen. My call for the corn has kind of come off a little bit. I was 128 last week. I'm moving that down to about 125 bushels per acre. This is also showing that the maximum planted acreage was about 96% at the beginning of the year. It's kind of come off about 96% planted acreage. That means that the farmers in that 10% have gone in and plowed over their fields and or kind of bounded up for silage or to feed their cattle or any of their other livestock. And what are we seeing though? We're still seeing wheat, corn have a bit of upward pressure, despite the fact that this rain isn't really going to help that crop. This crop is actually rallying on less demand on exports. We've seen the exports kind of pull back a little bit. Russia said that they aren't going to curb their exports on wheat, which adds that much more wheat to the pool, and that's sent the prices down. They've started kind of creeping back up as of late, despite the fact that there is less demand, but it's kind of getting drawn up with the rest of the curve. Soybeans have started to see a little bit of pressure, down about 35 cents. I still continue to see that go down because this rain last week that we had started getting these beans to do pod setting or setting the pods. They go from the flower to setting a pod. Now we're starting into the pod filling. So this rain that we just got is really key for the growth of the beans inside of those pods. We're going to start seeing good yield coming out of that due to that rain timing. It's not going to help corn. It's not going to help wheat, like I said. So on to the S&Ps. S&Ps have busted up above this 1381 that I've been talking about as a resistance. Next resistance we got is about 1400, and it goes about 10 increments higher thereafter. It goes to about 1410 and 1421 on the upside. So I think we might see a little bit of pressure on the upside, upward pressure in this S&Ps, but at the end of the day, if we start settling back down towards this 1380 area, it's going to set up for maybe a bearish turn in the upcoming week. All right, if you can't take that, take it easy.